My name is Muhammad Azri bin Muhammad Zakwat. My matric number is 274066.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad bin Abdul Hadi and my matric number is 273554.
Hello, Assalamualaikum. I am Ahmad Sufi Naim and I am one of the account executive for Automobile Workshop Sendirian Berhad.
Welcome everyone, and today we'll be discussing about the importance of the adjusting process. So basically, under the accrual basis of accounting, certain accounts may need to be updated at the end of the accounting period for certain reasons. For example, number one, some expenses might not be recorded daily, and some revenues and expenses incurred as time passed rather than as a separate transaction. And number three, some revenues or expenses might be unrecorded until the end of the accounting period. And basically, the analysis and the updating of accounts at the end of the accounting period before the financial statements are being made is called the adjusting process. Thus, the journal entries that brings and updates the account at the end of the accounting period are called the adjusting entry. And basically, there are four types of accounts that need adjustment, which is number one, prepaid expenses, number two, unearned revenues, number three, accrued expenses, number four, accrued revenues. So let's look at the four accounts that I've stated before. So number one, prepaid expenses. So basically, prepaid expenses are advance payment for expenses in the future, which is recorded as asset when cash is paid. Number two, unearned revenues, which is advance receipt for future revenues and are recorded as liabilities when cash is received. Number three, accrued revenues, which is unrecorded revenues that have been earned for which cash had yet to be received. Number four is accrued expenses, which is unrecorded expenses that have been incurred and for which cash has yet to be paid.
Okay, now I will talk about importance of profit and loss account. First, it provides information about net profit earned by net loss suffered by the business. Secondly, it helps in determining whether the business is being run efficiently or not by comparing the profit and loss of two accounting periods. Thirdly, it helps in taking effective control steps by analyzing the various expenses listed in the profit or loss account of the current year with that of the previous year. And lastly, it allows in the estimation of profits for the coming years by comparing the profits of previous year.
I'm gonna talk about the importance of statement of changes in equity. Statement of changes in equity help users of financial statement to identify the factor that cause a change in owner's equity over the accounting period, whereas movement in shareholder reserve can be observed in balance sheet. Statements of changes in equity disclose significant information about equity reserve that is not separately elsewhere in the financial statement, which may be useful in understanding the nature of change in equity reserve.
I will explain on the importance of the statement of financial position toward the company. Firstly, statement of financial position will help users of financial statements to assess the financial health of our company. When analyzed over several accounting periods, balance sheets may assist in identifying underlying trends in the financial position of the company. Secondly, it is particularly helpful in determining the state of the company's liquidity risk, financial risk, credit risk, and also business risk. When used in conjunction with other financial statements of the company and also the financial statements of our competitors, balance sheet may help to identify relationships and trends which are indicative of potential problems or areas for further improvement. This means that through the preparation of financial statement, we can identify our company's weaknesses and further we can make improvement. Okay, then analysis of the statement of financial position could therefore assist the users of financial statements to predict the amount, timing, and volatility of our company's future earnings. This is very important because the investors will look at our financial statement before they can invest in our company. Okay, that's all. Thank you.
This is the statement profit or loss for Automobile Workshop Suruhan Berhad. The title is Automobile Workshop Suruhan Berhad Statement of Profit or Loss or Other Comprehensive Income for the year ended 31 December 2018. To get profit or loss, we need subtract total revenue and total expenses. For revenue, we have only service revenue at the total 238,000. So the total revenue is 238,000. For expenses, we have wages expenses that amount 81,250, utilities expenses 10,000, rent expenses 7,330, insurance expenses 5,500, other expenses 1,200, supplies expenses 6,875, and lastly depreciation expenses 17,230. So the total expenses is 129,385. There we have to subtract total revenue and total expenses, which is 238,000 minus 129,385. So we will get the profit, which is 108,615 ringgit.
For Automobile Workshop Suruhan Berhad, statement of changes in equity for the year ended 31st December 2019, our beginning capital is 179,000 plus our net income 108,615, and we can get our ending capital 287,615.
Next, after we have done with the statement of profit or loss, statement of changes in equity, then we will proceed with the statement of financial position. The ending capital that we brought down from the statement of changes in equity will be brought to under the owner's equity. Okay, for the asset, currently we divide the asset into current asset and non-current asset. And for the current asset, we have cash, billing due from others, supplies, prepaid insurance, prepaid rent, and accrued revenue. While for the non-current asset, we have building, equipment, and less accumulated depreciation. And then for the liability, we have current liabilities, and under it is amount owed to others, wages payable, and unearned revenue. Okay, next for the owner's equity, there is the ending capital that we brought down from the statement of changes in equity previously. Okay, next the total asset will be equal to the total liability and owner's equity, and as you can see, the amount is balanced. Okay, thank you.
Okay, so now I'm going to show how I did the adjusting entries. So basically there are 8 adjustments here, and the first is the adjustment made on supplies. So by assuming that the company has an ending inventory of supplies for 625, so you can see here that I've debited supplies expense and credited supplies. Okay, and secondly is an example for accrued expense, which means that the company, the expenses have incurred but yet to be paid in cash. So basically I have assumed that the wages paid monthly is 6,250, and it is paid on the first of every month, and the wages for December is yet to be paid and must be paid on the 1st of January. So as you can see here, I have debited wages expense and I have credited wages payable. Thirdly is an example of a prepaid expense. So basically a prepaid expense is where the company has paid in advance the expenses which incurs as the time moves on. So here as you can see the rent, okay, as the company have paid 8,000 earlier in the year, and throughout as time passed, so there is 670 left for the prepaid rent. And in the same principle is the prepaid insurance. Basically there's 500 left in their prepaid insurance, and the company have paid earlier in the year 6,000. Okay, now now we are looking at an example of an accrued revenue. So basically an accrued revenue means that the company had performed services but yet to receive cash from the client. So by assuming that the accrued revenue is 24,000, I've debited accrued revenue and I've credited service revenue. And next is an example of unearned revenue. Okay, which means that the cash has been received from the client but the company is yet to perform services. So by assuming that there is 1,000 worth of unearned revenue, I have credited unearned revenue and also I have debited service revenue. So looking back, accrued revenue is an asset for the company, while unearned revenue is a liability for the company. Next, we are going to look at the depreciation expense. So there's two depreciation expense, the building and the equipment. So the expense, so the building and depreciation value of the building is calculated using a straight line method for 10 years with the scrap value of 1,000, while the depreciation value of the equipment is calculated using a straight line method as well for 10 years without any scrap value. So as you can see here, I have debited depreciation expense for both building and also equipment, and I have credited accumulated depreciation for both building and also equipment. So from here we have transferred it to the statement of accounts further.